press release?
I don't think.
What? About what?
Stick system.
You do that already?
Can you ask who you were with?
WCIH.
WCIH.
Oh, love Russia.
Good morning.
I think I'm like Vito for reminding me how to shake your hand.
Oh, you got me kidding me. It's horrible.
Would you like a press release?
Myself, that is.
I'm hit to the point where standing still and walking stairs make my back hurt.
Oh, that's horrible.
I'm with Woodstock. I'm one of the advocates.
Brent Adams. Now, read the IDs.
Oh, that's right. I was secretary back here. You too. Oh, Mayor. So nice to meet you. Thank you for coming.
Jasmine, have a great Christmas.
Oh, excellent. I see you. Thank you so much.
Mary, you must all be in action last night.
Yeah, not much on the agenda, so I didn't want to add to it.
16-minute meeting. Yeah.
Wasn't that nice?
That was great. I
Well,
amazed
that's your
myself.
Christmas present.
Right. I amazed myself how I'm able to, regardless if it's 16 minutes or 5 hours, I can still do 3 radio segments.
Well, it sounded like somebody had a 6 o'clock dinner date.
Well, what it was there were no presentations.
They were.
Yeah, they were in the
Oh,
house.
it's President. Auctioneers convention.
Yeah. There's even citizen comments. I mean, my gosh.
As a citizen who said I really don't have much to say.
Say again?
A citizen who said I really don't have much to say.
need a press release?
Yes, please.
Anyone else need a press release? Mayor, would you like press release?
Thank you. Appreciate it.
Thank you. Thank you.
How was the rush over? Old State?
I'll take a steak home, I'm glad football's over.
Did you go to Black Fridays and Saturdays state championships?
I was there Friday night.
Did you get SHG? That was it?
Just SHG. And then I got locked into the building.
Oh, cool.
What's that?
Yeah, Ryan said, oh, it's open all night. And I was like, we were working, and Ryan gets up and he said, I'll see you guys later. And he's calling his khaki suit. He's like, oh, the gates are locked. They call security.
Yes.
I wanted to do some of that, but the sports team already does it, so.
I didn't shoot it very well. I just got burned out.
Good morning, Senator. Go ahead and, we're going to start now.
All right.
Eliza's going to speak first.
Okay.
How are you? What's your trip down?
Windy.
Good, thank you.
Mayor, would you like to show me the?
Thank you.
You can make it, right? With everything else going on? With everything else going on?
Senator, do you know the mayor of Springfield?
Jim.
Yes, sure.
Mayor of Springfield? Okay. It's dormant.
Oh, let's make this magic happen. Are we all set? Everybody here? Thank you very much. Good morning, everyone, and thank you for taking time out of your day today to show you how important this issue is for me. I am in Argentina, America, and there's a big soccer game this afternoon that I don't want to miss, but I came here to Springfield to be able to talk about this today. I am Horacio Mendez. I'm the president and chief executive officer of the Woodstock Institute. We've been fighting for effective consumer financial protection for 50 years now, and that starts with the Federal Community Reinvestment Act back in 1977, and more recently with the passage of the Predatory Loan Prevention Act last year, which set a 36% interest rate cap on all consumer loans, and that's also the reason why we are here today. So when I moved here from Northern California a couple years ago, we asked ourselves a fairly simple question to determine the direction of the Woodstock Institute. Which financial products are doing the most to exacerbate the racial wealth gap? And now, a database of lending information provided to us by the Illinois Department of Financial and Professional Regulation, or IDFPR, gave us at least part of the answer to that question. Payday and title lenders, specifically and alone, drained at least $400 million a year from the pocket of low wealth and predominantly black and brown communities throughout the state, rural, suburban, and urban. The numbers are staggering. Imagine the impact that $400 million a year could make on a local economy. And those numbers don't include pawnbrokers, so it's much higher. Based on their industry's own numbers, we estimate pawnbrokers collected somewhere in the neighborhood of $50 million in fees in the last year where we have data, which is 2020. Now, keep in mind, however, where those hundreds of millions of dollars in fees have gone and who has benefited from making loans at, in the case of pawnbrokers, 243% on an annual basis. We're not surprised that these lenders are putting up a fight because we're talking about the success of an industry that profits from the financial distress of others. We're also not surprised that the representatives of these lenders claim that limiting their profits would mean an impending economic version of the zombie apocalypse as it relates to Illinois consumers. It didn't happen in the first year that the Predatory Loan Prevention Act was implemented and in effect for all other consumer loans, and it's not going to happen with pawn loans. There are other states in the country with a 36% rate cap that applies to pawnbrokers, and their world did not come to an end. Not addressing this issue, however, could essentially neuter the Predatory Loan Prevention Act and the will of the people in Illinois. In Georgia, car title lenders found a loophole and now can pawn cars at triple-digit interest rates. After Ohio capped interest rates on payday lenders, the number of pawnbrokers almost doubled and reaped the profits that payday lenders had previously. You'd be hard-pressed to find anybody that would publicly state that those outcomes would be good for Illinois consumers. But there's a lot of money at stake. So anything is possible, which is why we need to close this loophole, and we need to do so quickly and decisively. So, joining us today to talk about the industry, its impact, and also the effort to close this loophole, we have a number of guests that I'm very grateful were able to take time out of their day and a very busy veto session. And we're going to start with a consumer that has stepped forward and has played an instrumental role in humanizing this issue. One thing is having the data, a fact sheet, and information about the economic impact. Another one is telling the lived experience. So with that, I'd like to introduce Jasmine to the podium to tell her story. I think, there you are. Hi.
Hi, good morning. One second. Good morning, everyone.
Good morning.
Thank you all for joining me today so that I can share my story and my experience. My name is Jasmine Thompson, and I'm here today to share my experience with pawn loans. I'm going to break it down for you all to start off in tradition with the punchline. I went ahead and took out two $800 loans that cost me over $8,000 in loan fees, and I've lost all of my property that I went ahead and pawned. Let me repeat that. Two $800 loans that equaled up to a value worth $8,000, and I do not have the items that I pawned, nor do I have the money that I went to pay my pawn off with. I'm preparing to come to Springfield to share my story as I was asked if I identified as a predatory loan victim, which without much thought, I said yes. But today I'm also here to share my story as a survivor. In 2021, I moved to Chicago and I needed some extra money to pay for moving expenses and rent. Not for an uncommon situation for many folks, especially millennials my age. Knowing they were offering quick cash, I went to a pawn shop and I pawned my MacBook Pro, as well as I had three professional cameras. And they went ahead and gave me two $800 loans for my items that I pawned. These were the items I used to make a living. I used those items as a content creator online, so I needed my MacBook so that I could upload my videos from my professional cameras that I used. The interest rate on my pawn loans were approximately over 150%. For over a year, I paid $200 per month in interest to roll over the loans, and after a year, I had paid over $2,400 in interest, made no progress towards paying off my loans, and the pawn shop still had my items. Although that really, really hurt me, I surrendered, acknowledging that the $1,600 that I owed the pawn shop in order to get my equipment back was money that I couldn't continue to support my day-to-day life. I could not give them the money that I needed to survive. It was just that simple. Paying the pawn shop would have created a new crisis, requiring me to try to borrow money again and go in different routes, which just wasn't the option for me at the time. And the pawn shops, they want you to think that their loans are safe. With my experience, it shows otherwise. I was definitely a victim, and I thought that this would be the route for me. But as I'm here today to say, that was not the route I should have taken. So yes, I am a victim, but like many people, I'm still pursuing my dreams. This has not caused me to give up my social media content and my lifestyle. While struggling to get by, I'm still here in hopes that my experience will help be a cautionary story. I'm here in hopes that my experience will be a cautionary tale so that others will not go down the same road and be a victim to the same situation that I was. After this, I will continue roaming the halls here in Springfield, hoping to educate lawmakers and public about the predatory pawn loans that I have went through. Thank you guys so much for your time today, and I hope this really does impact.
Not only with regard to pawn, but also with title and payday. When we first started down this journey a couple years ago, we got a lot of feedback from individual consumers telling their story. But it takes a certain amount of courage to be able to come forward publicly and tell those stories, because sometimes there's a little bit of an embarrassment that you don't want to come out and actually say, this is what happened to me. But the ability to humanize a story that is economic is vitally important for us to be able to put the policy issue and this battle into its appropriate context. Equally important is realizing the fact that there is life after banking. I am one example of that as a former bank executive. Another example of that from what I read on his bio is the mayor of Springfield, Jim Langfelder, who is going to join us next. Thank you.
Thank you, and good morning. Thank you, Jasmine, for sharing your experience, and that's what life's all about. I was just out here and heard the experience in a brief moment of pawn shops, and what I'm here to do is really speak to my experience. I was in banking for 14 years. One part of that was being a Community Reinvestment Act coordinator. For those that aren't familiar with that term, it's termed when banks were accused of redlining in poorer neighborhoods, largely high minority populations where they draw red circles around those neighborhoods, not to lend in those areas. So the Community Reinvestment Act took us to better times with regards to the banking industry. And of course, with banking, it's all about interest rates, access to capital, things of that nature. So my first experience, I believe, if memory serves me correct, was with credit cards. I was in the credit card department, and at that time, I believe it was Congressman Durbin that said we need to have a cap on interest rates, and it's a lot lower than 36%, by the way. But the reason for that is because of what Jasmine experienced, but on a much lower level. That went, as a banker, I thought, well, why are they doing this to the bank? You look at it from your own perspective, but it's important that you really take the totality of the situation. And we're all in this together. The pawn shops wouldn't be around if it wasn't for the consumers to come frequent them, and vice versa. It works both ways. So with this legislation, I think it's important that we open that dialogue. What is right and the rights of the consumers and small businesses? We don't discount that fact because, as a banker, again, I was reminded that, banks won't make a $100 loan or $200 loan. I know for a fact, that's where the SBA came into effect and things of that nature. But really what we want, as my own personal self as a mayor, is to make sure that we do have the individuals that have access to capital so they can survive and thrive. Everybody wants that. Nobody wants higher, how much is enough to earn? And I think that's really the essence of this legislation. But most importantly, I think it opens up the dialogue to have that conversation. Sometimes it might be difficult, but in the end, what we're all here to do, I just came from the Obama plaque, when they introduced the plaque there, but it all goes back to Abraham Lincoln. And as a legislator, so thank you, Senator, for bringing this to the forefront, or as a city official or wherever you live, it's all about Abraham Lincoln. It's a government of the people, by the people, for the people. And we're here to represent everybody, and how best can we do that? And that's what we're really trying to do, is get to the essence of what is fair to make sure that what happened to Jasmine or others don't experience that as we move forward as a community together. So we appreciate everybody's attention to this important issue to all of us.
And what Mayor Langfelder said is very important and needs to be put also in its context, that this isn't being done in a silo. It's not about payday or title or pawn. It's about the broader financial services scope that's available to people when they need it and on their terms. So this is a big picture issue for Woodstock and a lot of our national and local advocacy organizations, is to make sure that products like the bank on checking accounts, which the state treasurer and others are really advocating financial institutions to adopt, are available so that the unbanked can get affordable checking accounts, and then go to financial institutions that will be able to provide affordable, responsible, short-term credit. One large national bank has up to $500 for a $5 fee. Others have certain kind of credit modes that are available to certain individuals that fit within the scope of these products that can provide that short-term cash when it's needed and when it's justified. But it's part of a broader journey where you actually have an advocate that can help you through a lot of stages in life. Paying off student debt, planning for marriage, trying to figure out a short-term cash needs, etc. So it's not that we, any of the legislators, any of the policy people, any of the nonprofits that are involved in this, have an agenda against a particular industry per se. It's just that some of this industry exists because there are gaps in the continuum of the financial products and services that everyday people need, and we're working hard to be able to fill those gaps. So joining us also today, and a big supporter of ours, both with regard to the Predatory Loan Prevention Act, as well as trying to close this loophole for the pawnbrokers, is State Representative Sonia Harper. Representative?
Thank you. Now, last year, the Black Caucus led the effort to help narrow the racial and ethnic wealth gap. Our economic pillar included the Predatory Loan Prevention Act, which passed with overwhelming bipartisan support, putting a stop to many forms of predatory lending in the state of Illinois. But our work is not done. The pawnbrokers would like us to sanction their charging 240% interest on a loan. Before 1985, it was a felony in Illinois to offer a loan to someone with an interest rate higher than 20% per year. But the 80s was the decade of trickle-down economics and spend, 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 and if you didn't have the money, then borrow, borrow, borrow. So the industry persuaded the General Assembly to carve out a loophole into the law, and for over 35 years, legalized loan sharking in Illinois sapped billions of dollars from lower-income Black and brown communities. Predatory lenders have knowingly and purposely led people into cycles of poverty or kept them in poverty. Before this law passed, Illinois families paid hundreds of millions of dollars in loan fees per year, the fourth highest in the nation. The PLPA was about changing this and about helping our community members achieve financial stability. And last year, Illinois joined 17 other states and the District of Columbia in capping interest rates on payday loans and other loans at 36%. However, despite this progress, pawn shops convinced the judge to give them a loophole to allow them to continue issuing loans with abusive and excessive three-figure interest rates, loans that would have been criminal in the early 1980s. So this means our work is not done. We need to pass a bill right now that requires pawnbrokers to comply with the state's 36% interest rate cap. This is how it was always intended to be. And it's the only way we'll truly put ourselves on a path to narrow the wealth gap in our Black and Latinx communities. So I'm sponsoring House Bill 5840 to do just that, and I will continue to fight to protect all Illinoisans from predatory loans. Thank you.
Thank you so much for your leadership and your advocacy, Representative Harper. Speaking next is Senator Wilcox.
Thank you. As a former veteran and officer and commander in the Air Force, it was disappointing every time I left an Air Force base, an Army base, and saw the prevalence of pawn shops and payday cash locations. And I knew firsthand what it was doing to our young airmen and our young soldiers who were in need of cash to be able to live. So I'm not here to disparage the industry. We've had this industry for centuries. Cash flow is important. But the reality is We can't just legislate this. I was proud to join the PLPA last year. I'm proud to sign on to this bill this year, but capping interest rates is not the only answer. We have to think about doing education to our consumers, and that's why I appreciate what the Woodstock Institute is doing. If in your daily travels you pass a payday loan place, a pawn shop, you have a neighborhood that can be stronger. So think about having a discussion of what loans and cash flow mean to consumers and help them understand there are better ways to finance what needs to go on. But this cap is needed in Illinois, and I'm proud to be a sponsor of this bill. Thank you.
Thank you so much, Senator. Very well said. Lastly, and I'm going to try not to get too emotional because Jackie Collins has been an impressive advocate just for the 2 years I've been in Illinois and reading about her background and her biography and all of the work that she's done. She's been such a strong supporter of the communities that Woodstock is chartered to protect and to help and to see thrive, that it's no surprise at all that she's been a champion of the Illinois Community Reinvestment Act, the Predatory Loan Prevention Act, and this closure of the pawn loophole, as we're calling it. I'd like to welcome now our legislative champion and the Assistant Majority Leader for the Senate, Jackie Collins.
Good morning. I want to thank all the advocates as well as my colleagues that have joined me this morning and the mayor. Also joining me, who will not be speaking, or did he leave already? Well, Senator Simmons. But let me just say, today is like deja vu over again. For nearly 20 years, we've been hearing predatory lenders talk about how consumers need them, how capping interest rates will cause credit to disappear, and how no one else but them can help their consumers. What's different today is that we've had a 36% interest rate cap in our state for over a year and a half, and it's working. I stood here in March on the first birthday of the Predatory Loan Prevention Act and pointed to some of its achievements. One, consumers have saved more than $200 million in fees. Two, bankruptcy filings had dropped in the state of Illinois, so much so that Illinois was outperforming all our neighboring states, all of whom do not cap the interest rate on consumer loans at 36%. Since the PLPA became law, the Illinois Department of Financial and Professional Regulation has granted 168 new lending licenses. Companies are making the choice to do business here and make loans under our 36% cap. But back in March, I also said some things hadn't changed. There were still sharks in the water, loan sharks pretending to be mermaids. Well, those aren't mermaids. They're, sad to say, pawnbrokers. Pawnbrokers want you to think they're different from the payday lenders. But pawnbrokers, like payday lenders, make a living draining money from people who are struggling, people that reside in my district and many of the other marginalized Black and brown communities across the state and in our rural areas as well. Pawn loan interest rates are comparable to payday loan interest rates. There's an exhibit here, I believe. As you can see on this chart, before we capped interest rates at 36% on the average APR, the average APR charge by a payday lender was 297%. The APR charged by pawnbrokers in 19 out of 20 transactions during a recent investigation was 240% APR or even higher. Capping the interest rates on pawn loans at 36% will mean the money currently going into the pawnbrokers' pockets will instead remain in consumer pockets. I work for consumers, not for payday lenders or pawnbrokers. And research shows that putting money in consumers' pockets is good for the community and local economies. It creates jobs and reduces the need for emergency cash. Here's the bottom line. The PLPA is working. The pawnbrokers have been allowed to evade it for over a year and a half. This bill will fulfill the original intent of the PLPA to cover all forms of predatory lending. I want to thank my colleagues who are co-sponsoring this legislation, especially Leader Kim Leifert, Chairperson Laura Ellman, and my friend from across the aisle, Senator Craig Wilcox. I thank you for your service, and I thank you for coming forward to reveal some of your experiences and what you've actually been able to see the impact on the personnel, but also our veterans. Now, I want the protections not to be only available to the active military, but also to the veterans. And I thank the consumer advocates for their tireless work to protect consumers from predatory interest rates. Thank you.
Thank you so much, Senator. A few closing thoughts and statements. First, I wanted to recognize Senator Robert Peters and Senator Mike Simmons, who had to leave but dropped by to show their support. And I also wanted to make sure that everybody here knew that we're all part of a coalition of organizations that are working hard to be able to make sure that there's an appropriate, safe, and affordable credit and banking system for all Illinoisans, from upper income to low income. And that sometimes means that we're partnering with organizations that are going to need to provide financial products and services to folks that technically are unbankable. And we found one such partner among many in Capital Good Fund, which is in our parlance a CDFI, a Community Development Financial Institution, which are nonprofit lenders that many financial institutions, through their obligations under the Community Reinvestment Act, invest money into to be able to make loans, such as consumer loans, to people that do not qualify to be bankable. Capital Good Fund has seen an enormous increase in lending applications from Illinois as a result of the implementation of the Predatory Loan Prevention Act. And for those of you keeping score at home, those borrowers do not have to be banked. They don't need a bank account, and the interest rate being charged on that is 5%. And it is a financially sustainable business model for that CDFI. That's important to say and to keep in mind as we start talking about the business model of these types of lending entities. So in closing, and we'll be available for questions, in closing, there are two things that I am sure of, that we will continue to fight to make credit and financial services available, affordable, and responsible for all Illinoisans, irrespective of who, where, or what. And secondly, the U.S. will beat the Netherlands on Saturday. So with that said, I'll open it up for questions. Sir.
No, thank you. At the beginning and at the end, it was said that this problem skews toward people of color. And in your words, why is that?
If you look at the policies over the years that have negatively impacted African American and brown communities, this is not an anomaly in the policies that have impacted these communities. Whether it was the redlining, where you have the wealth gap right now, is based on the policies of redlining, or when we had the largest foreclosure crisis in 2008, we found a lot of those mortgages, which before we put in mortgage fraud prevention legislation, impacted those communities that might have fell somewhat below certain economic standards, right, or had low credit scores. But how and why it impacts these communities more, the same reason they have been targeted. These communities have been targeted. They don't have necessarily to always have banks in their communities. They maybe live in bank deserts, right? And so we'll find these pawn shops, payday lenders located numerous times in communities. Every other block in my community, Auburn Gresham and West Inglewood, you see payday lenders, or you did see payday lenders, pawnbrokers on every other block, because these communities have been targeted, like all the other policies have targeted marginalized communities. So that's not anything new, and it's not an anomaly, right? These are policies that have created the wealth gap that we see now.
I would say too, that you say 36% sounds awful darn high.
36% is usury. It is usury. And yet, this is only, we were only successful in getting capped at 36% using the model set by the Predatory Lending Act. So we used that legislation as a model, and they set the cap at 36%. The Predatory Lending Act also encompass pawnbrokers, all predatory lenders, payday lenders, auto title loans to protect the active military personnel. So we used that 36% model because of the Predatory Lending Act. And Senator Wilcox probably could talk about that as well.
Thanks very much. Could you address, I think I've seen where pawnbrokers say they're just filling a need in the marketplace, right? They're giving loans to people who don't have good credit, and this is the only option that they have to access that credit. Anybody want to provide a response to that?
Well, that's like saying the Sackler family was just meeting a demand. It didn't make it healthy. So the challenge there is that, as I said earlier, we need to be able to understand the broader financial landscape in which marginalized communities need to operate. There are fewer branches in these communities. We're fighting that. We're protesting mergers to be able to make sure that branches stay open or are expanded as part of community benefits agreements. Something we've done with regard to the Bank of Montreal purchase of Bank of the West, or Old National's purchase of First Midwest. We're doing everything we can to make sure that we at least stop the disinvestment, and it's through that disinvestment that opens up the gap, where then you have the payday, the title, and the pawn shops come and fill that gap. It's not a healthy alternative. They play an important role, don't get me wrong, but we need to make sure that that role is not to be able to drain what little resources individuals or communities have to such a point where it becomes an economic liability. So yes, there's a demand, but the reason there is a demand is because the system isn't working right. And Woodstock, with our partners and legislators, policymakers, we're trying to push regulatory agencies and the financial industry to try to make sure that we fill in those gaps with appropriate and safe and well-regulated products.
How do you categorize checking account overdraft fees in terms of predatory lending? That is, in fact, I think one of the ways they meet the Community Reinvestment Act is to make checking accounts with overdraft protection.
Some of those fees are predatory. And we, along with our national partners in Washington, D.C., like the National Community Reinvestment Coalition or the Consumer Federation of America, et cetera, we have been pushing very hard to be able to either see the elimination or the reduction of those fees. We have champions in Washington, D.C., we have champions in Springfield to be able to talk about that. I think the public shaming of Jamie Dimon by Elizabeth Warren was kind of fun to watch, because taking a look at the non-interest income that J.P. Morgan Chase alone was able to get in the hundreds of millions of dollars for overdraft was eye-opening for a lot of people. They had no idea that it was that high. So that is part of this broader battle that we're waging. We are working with our banking partners to be able to identify opportunities for us to be able to push and say, like we did publicly with regard to, I think it was the BMO Bank of the West merger, where we publicly testified and said, your overdraft fees are way too high. You need to work on lowering those. So we're doing that as well, but they are predatory.
Does that have to be done at the federal level?
Well, for state financial institutions, the state of Illinois has a certain amount of sway. The challenge is that the big players are all national banks, and that goes underneath the Department of Treasury's Office of the Comptroller of the Currency, and there's something called federal preemption, which says it doesn't matter what the state wants. If it's a national bank, they can go by national rules. So we're putting as much pressure as we can on the acting comptroller of the currency, Mike Sue, and as well as the Federal Reserve and the FDIC, to really start championing some of these causes, particularly as we get more information about the economic cost that that has and how it's exacerbating the racial wealth gap.
So let me add, and I appreciate that question, but let's not stop just asking the question there. Anyone had a red light camera in Chicago that went unpaid after 30 days? $100 ticket becomes a $200 ticket. Let's hold our governments accountable as well, even though it may not be spelled out in this legislation. Let's talk about what happens when our government is predatory on our citizens as well. So thank you for that question.
There was mention of an injunction that allowed these pawnbrokers to continue at this 240 rate. Is there a reason why they were able to do that, or like, whereas other groups, they're still held to this 36% standard?
Oh, go ahead.
I might not be able to address it to your liking, but it was interesting that they had to go to Sangamon County to get a judge to get the injunction, and I thought that was quite interesting. They went to Sangamon County, and I think this is the same judge, if I'm not mistaken, but maybe some of the reporters might know. I think it's the same one that came after Governor Pritzker with the mask mandate.
I think there was a disagreement in terms of interpreting the Predatory Loan Prevention Act as to whether or not it applied to the law that licenses pawnbrokers. And because of that lack of clarity in some people's minds, there was no lack of clarity in ours, that opened up the door for that injunction. And as a result, I think all eyes turned to us saying, okay, well, the easiest way to fix this is legislatively. Let's just go ahead and include it. There's something, it's like there's an old law adage, home rule versus Dillon's rule. One says if you don't specifically state what it is that's covered in terms of actions, it doesn't count. The other one is you have to use a reasonable amount of logic to include a list of activities that should or should not be allowed. In this case, I think it's just easier for us just to be very, very specific in terms of all of the other laws that exist that the Predatory Loan Prevention Act should connect to. Saying all consumer loans and all consumer lending evidently was not sufficient for some, at least this one judge in Sangamon County. So now we just have to connect the dots, follow the bouncing ball, and make it even clearer for this judge to understand. Any other questions?
Do you have any concerns that this legislation, that given the injunction previously, do you have concerns that pawnbrokers might find another way to get around this legislation, even if it does pass?
Well, yes. It'd be silly not to have concerns about that. We have heard also from payday and title lenders that if something like the Predatory Loan Prevention Act were to pass, that would be the destruction of their industry entirely. We did not see that happen. As a matter of fact, we've seen new licenses for consumer lenders come into Illinois. It's just within, I guess, it's hard to say 36% is affordable. It seems really high, but we have to work with what we've got. So when we're hearing the same thing from the pawn industry, without really being able to sit down and understand the balance sheet, the business model, we're hearing the same, the sky is falling, this is a zombie apocalypse, everyone's going to suffer. It's really hard to be able to take that seriously. And if they are fighting for their revenue stream and for the existence of their industry, as they're saying, they're not going to go down without a fight. So we expect there to be continuing, hopefully, negotiations. But to a certain degree, our bottom line is we want to make sure that consumers are protected, that there's consistency in terms of law and cost, that there's clarity in terms of the cost of capital when people borrow money, and that we are doing everything we can to be able to protect Illinoisans from predatory lenders and unaffordable cycles of debt. Last questions? Any closing comments from our guests? Well, thank you very much, everybody. We appreciate your time and your time.
I'm glad to see the pawnbrokers have gathered in the back I hope it was informative to you as well. Thank you.
The other side of the story. I'm glad to tell you.